So good morning, I'm Mike Richards from Wave Cycle Trader, and this morning we're going to look at the power of using cycles and our cyclically adjusted smoothed CRSI indicator, where some stocks are concerned on a slightly longer time frame. So we're going to be looking at the daily time frames. Now, prior to digging into a couple of stocks and ETFs, I just want to give a little warning here. This is the daily chart of the ES Mini, the futures on the S&P 500, and if I just add in our core cycles analysis here, and that comes from the analysis and spectrum analyzer down here, mixed with the AI algorithms that we run over that to select the specific cycles. And you can see the market's been moving up, which is what we've been expecting since we bottomed out around here. But this magenta line and the dot on it, that's the core composite, which is the combined effect on price and expected effect on price of these three cycles in that composite. And those are the two core cycles, the 40 and 80 day, that have got a harmonic relationship of 2 to 1. So you can see everything's still pointing up, but between around the 20th of this month and potentially the 27th, we're expecting this to top out, and then for a move down into the 20th of November, possibly as late as the 30th. So that's going to be a fairly substantive move to the downside. I'm not going to get into just what that might mean in terms of depth of move or anything, other than to say if you're long any particular stocks or core ETFs, it's time to start to be cautious and run tight stops. You can see the last CRSI buy signal was coming out of these lows here, and the previous one got us into this little move here with the appropriate squeeze momentum firing to the long side. So that's where we are in the bigger picture of things. I also want to look here at the SMH, which is the semiconductor ETF, same basis. So on the CRSI green zone up through the boundary, there was the trade there, and then it could have been added to here on the pullback, and it's still indicating long, the core dominant cycle indicating a little bit further upside to go. Now this is the Mansfield indicator, which we use to give us an idea of its relative strength compared to the core market. And again, we cyclically adjust and color code this for stage analysis. I'm not going to get into the whys and wherefores. If you want more information, please come and look at our website at wavecycletrader.com, or the website for the software itself that I'm using, which again is proprietary. We built this software package. That's at tradingvision.net. Again, same analysis. If I add the core cycles in, you can see there's the composite and where we are, and there's the top area of expectation. But we're getting quite close on this 80-day cycle to a top, and then the 40 is here. So again, although we're expecting further upside, that should start topping out somewhere between the 20th of this month and the 29th of this month. Then we're looking at a downside move for around 4 weeks or so initially in SMH. So that's one of the key sectors, and one needs to therefore be cognizant of that. The other thing we have here is the relative rotation. So if I look at the core sector ETFs, of which there are 11 that make up, they're weighted, that make up the total market. And you can see XLE, the energy sector, has been in the leading sector, having come out of improving. But XLK is heading down towards weakening here, as is XLC and XLI. Financials, they've perked up a little bit, but they're not yet in the leading sector. XLY, which is the third biggest one by market weighting, heading across into lagging over here. So that's not the picture you would want to see when we are, all guns blazing to the upside. And the other thing that we can look at here is the Magnificent Seven stocks, as they're affectionately known, but those mega cap technology stocks. And you see Nvidia, it had a really good few days last week, but Apple heading back towards lagging, Amazon and Microsoft firmly in the lagging sector and still heading there, Tesla not looking so clever, and Meta also is, and these are daily, by the way, not weekly, starting to come out of the leading sector. Again, not the picture I would expect to see in a major bull phase. Now, a couple of stocks to look at. Well, the first thing I'm going to do is look at an ETF, which is Hack. And this is the cybersecurity ETF. Now, this is really one that we're already in this, and the last entry was down here. You can say we came down into key support. The cycle was bottoming. Then we got our cyclic CRSI buy-in tool that got us into this stock at 61.05, and one is still in it. But again, back end of this month is the next cycle top that's expected, so we're keeping a close eye on this one from here on in. But just to show you the power of these cycles, there was the entry and exit on the last cycle. So again, into support, there's your cycle bottom, there's your momentum, there's your CRSI buy signal. It gave us that part of the run here right back up into the key resistance. Now, you could have sat through this pullback and got the last bit. I don't tend to do that. You've had the bulk of the money. You've had it for a very, very small risk. Time to move on and look at the next opportunity when it starts to bottom back down here. So you've got the two CRSI signals here and here, and the second of which then allowed us to break up through the resistance zone. Two stocks that are reporting earnings this week. Netflix. Now, Netflix is starting to break out above a key support resistance zone rather. The buy on this was down here as we came off the wave 4 low, but you can see the cyclic CRSI squeeze building up it went. Mansfield was on a buy, cycle was bottoming. If I add in the core cycles again, you can see that cycle bottom and the CRSI buy signal. That got you into this stock at 600. So you've now got a decent profit in this of over 15%, and we're heading towards a cycle top with earnings, which can be something of a crapshoot. You can also see the diverged momentum here on the squeeze indicator and the diverged situation we've got with our cyclic smooth CRSI and the top of the dominant cycle. Time to stand aside in Netflix and see what happens after earnings, especially given the backdrop of the overall market. Another one that I'm looking at here is Johnson & Johnson. Now, slightly different picture here in that they are also reporting earnings. The last buy was coming here. Wait for the retest of support. You've got the breakout buy coming off this low on the CRSI indicator here. That gave you a buy zone of around 148 in this stock, and the sell was up here as we came off this high around 162. So again, a decent profit. Not going to sit around and hold it for the last squiggles. But if we zoom in and we can see where we are now, cycle has bottomed, we're turning. Momentum is coming up towards the zero line. We've had a CRSI buy signal, and you can see we're about to get a Mansfield signal. This, therefore, potentially can run. It needs to clear 163.50, and if it can do that, the next two levels above are at 169 and then 174 in Johnson & Johnson. So that looks more interesting and a potential hold through earnings for those that want to take the risk of doing that, or let the earnings settle and then look for a buy opportunity therein after. Couple of others that look interesting here. Dell. So Dell held support on the most recent pullback. It gave a CRSI buy signal coming off the pullback low here. The last entry, therefore, 108.13. We had a daily squeeze, and we've just had another daily squeeze fire long as we broke out above 127.17 last week. This looks to me like it can run back up into daily resistance at 146. Now, I'm just going to take you down to the hourly chart. There you can see the breakout last week, but on a shorter term, the CRSI is overbought. It's in a red zone, and the shorter term hourly cycle starting to curl over. One would suggest, if you're looking at this stock, a pullback and then another setup on a shorter time frame with a CRSI buy would be the way in to get into Dell from here. And if I go back and we just have a quick look at the cycles, that's suggesting here that we've got some way to go to the upside into around mid-January next year in Dell. So that looks fairly interesting. The other one is RDFN. Now, I've not put any Elliott wave or anything else on, but what I would warn here, before I put anything else on, you can see there's the all-time high. After the IPO, we got the usual push up, then the pullback. And the question is this move up we're seeing corrective against that move down, or are we going to see a lot more? We don't know, so therefore we have to take precautions and add the retrace fibs on. As you can see, we've had a leg up here to the 50% retrace fib and a pullback. Typically, when we retrace at this degree, you get a second leg up, so you get an ABC structure, but leaving a target of 26.57 as the likely move to the upside. If I then add on the support and resistance zones, you can see the two initial support zones, but we need to clear this 1770 area if it's going to run. Then if we add the cycles in, we can have a look at those. And what that's suggesting here is that we've got a little bit more downside. So I think we're going to pull back deeper against this. And it may be we got a pop last week. We may get a little bit more upside, then a move down. The CRSI is starting to turn up, but we don't have a buy. The Mansfield's starting to turn up, but we don't have a buy. This is on the watch list. If this can pull back deeper into around the end of this month, then I may be interested in considering a position to the long side. So I hope that's interesting and useful and informative. If you want to know more about this or join us in using the Wave Cycle Trader strategy, please come to wavecycletrader.com. If you're interested in the software, please go and take a look at tradingvision.net.